Hey, good morning. Let's go over today's trade plan. So we can see from yesterday afternoon's price action as well as the overnight session that the market is very balanced between the pre-market support zone of 64 quarter to 66 quarter and the initial resistance zone of 77.5 to 79.5. So right now this is the range that the market is trading in on the smaller time frames. Bigger picture, we know that we're still in a pretty decent sized balance area within the context of a overall bullish environment. And for that reason, if the market can hold here at 64 quarter to 66 quarter, then there is potential for a retest of 77.5 to 79.5 and possibly a break to higher prices for a test of the 80.5 high volume node, the 83 level, and potentially 86 to 88. So off the open, our bias is fairly neutral. And we do need to be more flexible and nimble on the day time frame because the market is trading within a defined balance area. And anytime the market is trading within a defined balance, it can really go either way off the open because neither side is really very dominant when this type of environment presents itself. But it's still within that overall bullish market. And for that reason, even if we get a breakdown below 64 quarter to 66 quarter, responsive buyers can still be active at the support zones below. So 56 to 58 half is still an area where buyers can be active, and especially 51 quarter to 53 quarter, which is a significant recent low, that's still an area where responsive buyers can be active. So the only time that it makes sense to be cautious on the long side below 62 or below the pre-market support zone is if the day is again developing into a trend type day, or if we're seeing some very heavy downside momentum and it's just the start of a even a short-term move, right? So if the sell-off starts, let's say at 2068 or something, well then by the time it gets to 56, 58 half, it'll be exhausted anyway, especially on the day time frame. So that's still a trade that can be taken. But if the selling initiates from 62, if that's the start of the swing or start of the directional move, then you'll have to be a little more careful at 56 to 58 half and perhaps wait for the 51 quarter to 53 quarter zone before fading that price action. And again, that's with the understanding that it's not developing into another trend down day, which is fairly low odds given the overall bullish environment that we're trading in. So off the open, we do have to be careful on the short side because from a location perspective, the 64 quarter, 66 quarter is active support and it's still an area that buyers can defend. So shorting into it or shorting near it is actually a higher risk play. So unless we're seeing some very clear-cut signs where momentum is just clearly bearish, the other markets are breaking down, Russell's breaking down. So unless we have some pretty clear signs that bring the 56, 58 half zone into play, it's probably better to be more cautious on the short side here because the location is pretty decent for larger time frame buyers to step in, especially at 56 to 58 half and 51 quarter to 53 quarter. And again, the market does not have to go all the way down there. Even if it breaks pre-market support, it could reverse off of 56 to 58 half, and that's if it even breaks. Again, it does not even have to break. It could just reverse right from here. And ideally, it does hold 64 quarter to 66 quarter, and holding above it would tell us that the buyers are fairly active. On the upside, we have minor resistance at 72 quarter to 74 quarter, and then the main resistance area is 77 half to 79 half. If the buyers step in a big way, and we're seeing a lot of upside momentum, then that zone can be taken out, but that is the main resistance area. And a break above it would be a short-term balance breakout from yesterday's balance and the overnight balance. So if you get a breakout above 77.5 to 79.5 and it's happening on high momentum, then there's potential to go up to 86, 88, and then we'll deal with that zone. And then beyond that, we have the open gap at 93.75, and then better resistance at 96.75 to 99. But given that there really isn't any major economic catalyst due today, and given that the volume is fairly light, those upper resistance zones at 96.75 to 99 are pretty far away, and that would be a very extended upside objective, and we'd have to see a pickup in volume and momentum in order to get there. Right now, the upside resistance zones that are really in play are 77.5 to 79.5 and 86 to 88. So as the market tests those zones, especially 86 to 88, if you're long, it's probably a good idea to take profit. And first time back up into that zone, we can still see profit taking, and the sell side can still be active because we are trading within a balanced environment right now. And typically in a balanced environment, pretty much every zone provides a short-term reaction. So those are really the main ideas heading into the open. The pre-market support zone is going to help us figure out whether the buyers are really active off the open. A break below that does not mean that the entire larger time frame bias switches. That will continue to be bullish. So even if you break pre-market support or break the 62, we can still get buyers active at the zones below for a move back into yesterday's range. And on the upside, 77.5 to 79.5 is the primary resistance. And over there, we'll just have to see whether the underlying environment in real time supports the idea of an upside breakout. So for example, if we go up there and the momentum's not really all that great, or there's not really much broad market strength, or if the other markets are just hitting better resistance, then again it'll be a good idea to exit, take profit at 77.5 to 79.5, and potentially even take a short. But that's something that we'll have to see a bit more of in real time. So those are the main ideas. Let's see if the buy side can hold ES above pre-market support, and we'll take it from there.